fears of an economic downturn looming over this year's election. Donald Trump taking it a step further this week, making a bold prediction that the U.S. economy will dip into recession if he loses in November.
We're in a massive bubble. We have money that's the cheapest money we've ever had, yet nobody can borrow it unless you're very rich. I mean, if I want to borrow money, I can borrow all the money I want to borrow. But if you aren't really rich, you can't borrow money. So do you ever hear of cheap money that nobody can get? We're sitting on a bubble. The stock market is very inflated.
Well, regardless of what happens, my next guest makes the argument that there is only one place to safely invest your money during these economic and political unstable times. Joining us right now is the new case for gold author, James Rickards. There's the book right on the screen. Jim, good to see you. Thank you so much for joining us.
Thank you, Mary.
First off, Donald Trump's prediction, massive bubble, massive recession coming. Do you agree?
I do. You know, there's a lot of there's social science research that says that monkeys do better than economists are predicting, because monkeys don't know what they're doing. They're 50% right. Economists heard and are wrong most of the time. The Fed has never predicted a recession. We've had many. So don't listen to economists, listen to executives. Trump may or may not be right, but I'd rather listen to an executive than an economist.
So, and you think that owning gold will actually shield you from the impacts of a recession?
For slice, I recommend 10% of your investable assets. People think you sell everything, buy gold. I don't recommend that. 10% of your investable assets. If I'm wrong and gold does nothing, you won't get hurt with 10%. But if I'm right, if everything else crashes, or if Trump's right, gold will go up by multiples. So that's your insurance for the rest of your portfolio. But there are new reasons to have gold, which I talk about in the book, 21st century reasons. Vladimir Putin has a 6,000-member cyber brigade working night and day to erase digital wealth. So I meet billionaires. They say, what do you have, stocks, bonds? I say, no, you don't. You have electrons. Putin can wipe those out. The thing about gold, you can't hack it, you can't erase it, you can't delete it.
Tangible. So, it's tangible.
It's tangible, that's right.
Yeah. Jim, the correlation between gold and some of the ways of buying gold is not always perfect. What I mean by that, if the viewers are watching this, they listen to you, they want to put 10% of their assets in gold, how do they do it? Is it physical gold? Is it an ETF? Is it stock in a gold company?
You don't want paper gold. You don't want ETFs, COMEX futures, or London Bullion Market Association unallocated gold. The reason is they're all paper contracts. When you most want the gold, they'll terminate early, close the exchange. The COMEX will say, you know, trade for liquidation only. You won't be able to get the physical. They sell 100 times more gold than they have, and that's okay, because futures exchanges always have large open interest. But if 100 people show up and there's one bar of gold, one guy's getting the gold, everyone else is shut out. So have physical gold, bullion, coins, American Gold Eagles. Again, for a slice, 10%, put it in a safe place. Not in the banks, put it in private storage.
And that's very important, because the ETFs, which is what a lot of people think about, as Jim confirms, is not correlated directly to the asset price of the commodity.
Okay.
Jim, we're in an unusual moment right now where you have the market's doing okay, and gold had its biggest quarter in a long time, so people are buying gold. What gives here? You usually don't have those two things hand in hand for a long time.
You know, gold sometimes correlates with the stock market, sometimes not. Ben Bernanke famously said no one knows how to value gold. That's actually not true. Gold, the dollar price of gold is just inverse to the dollar. So if you think the dollar is going to get really strong, you don't want gold. If you think the dollar is going to weaken, you definitely want gold, because a weaker dollar is a higher dollar price for gold. So right now, with dovishness from the Fed, the dollar is at a 10-year high. It's got to come down. You know, the cross rates are just a seesaw. They can't all go down at once, or they can't all go up at once. They go like this. So with a strong dollar, you should expect a weaker dollar. That means a higher dollar price for gold.
Okay, but how do you get somebody excited about gold when you look back over the past year? I mean, it has not been a fun ride to watch. Precious metals, they haven't budged. I mean, how do you tell somebody, hey, I mean, they look at the U.S. stock market and they see real returns. Gold, how do you prove that to them? How do you
There's no yield.
How do you pitch them?
There's not supposed to be yield, because it's money. Take $1 out of your purse and look at it. What's the yield? Zero. If you want yield, you have to take risk. Put it in the bank, you're taking bank credit risk. So gold's not supposed to have yield because it's money. The stock market's gone nowhere since 2015. I mean, it's volatile. You know, you can day trade it. But
hold on, we just saw record prices for the stock market.
May 2015.
And Main Street understands
May 2015 was the peak. But yeah, it's gone up a lot in the last 6 weeks. It went down a lot before that. Gold's the best performing asset in 2016. Best performing asset class of the 21st century. So yeah, now from August 2011 to November 2015, it went down 45%. That's a typical retracement in commodities markets. You don't go to the moon without retracing 50%. But I don't day trade gold. I have it for a slice of my portfolio. to preserve wealth. It's a difference between making money and preserving wealth.
Well, I think you make a good point, because I think of gold as a hedge. I don't think of gold as a commodity. And like you say, I think of it as money. If you think the dollar's going one way, you think the stock market's going one way, that's the reason to own gold.
And the other people who think of it as a hedge are the Chinese. You know, they've got $2 trillion of U.S. dollars denominated paper. They've been buying thousands of tons of gold. Now, the dollar...
You say they have way more than they even report.
Well, they do. You can tell that from Hong Kong imports and mining output geological surveys. They lie about how much gold they have, but I would too. If I were out to buy 3,000 tons and I didn't want the world to know, why would you tell them what you're doing?
Yeah,
but the point is, with $2 trillion of paper, the dollar has no greater friend than the Chinese. They want a strong dollar, but they suspect we're going to inflate it, which we will. Janet Yellen says that. So as the dollar goes down, the gold goes up. So they're hedged.
And then there's India. So that's another bullish point of it. Jim, good to see you.
Thank you, Maria.
Thanks so much. James Rickards joining us, and the new case for gold.